Okay, good morning and welcome to BPA's second quarterly business review for fiscal year 2024. I'm Joel Scruggs, Director of Communications. We appreciate you joining us for this forum today. Before we get started, I want to share a few reminders. Today's presentation is being recorded and shared via WebEx. You can find the link to this meeting and other BPA hosted meetings and workshops on the event calendar on our website at bpa.gov. And if you do happen to experience any issues with the WebEx, you can find the slide deck online at bpa.gov/QBR. One other note, the WebEx platform includes accessibility tools, so please take a moment to familiarize yourself with these options and use them as needed. We kindly encourage you to include your company name or organization name in your display name on the WebEx. Having your company name on display helps our panelists and other participants during the Q&A portion of this meeting and helps us know who is involved today. And as we recently learned, WebEx now allows participants to change their display name without having to log out and log back in. You can now edit your display name by right-clicking on your name. Gold stars to all of those of you who have adopted this as a standard practice. We welcome your questions. You can submit questions at any time during the presentation, and we will respond to them at the end during the Q&A segment. To submit a question, you can click the Q&A button, input your question, and press send. And then if you think of a question after today's presentation, you're always welcome to email us directly at communications@bpa.gov. This morning, our Administrator and CEO, John Hairston, will share an overview of BPA's second quarter operational performance, and then our Executive Vice President and Chief Financial Officer, Marcus Harris, will summarize the agency's financial performance. John will then close out the main presentation with a state of the business and strategy update. And following that, I will highlight some upcoming meetings, workshops, and processes, and then we'll wrap things up with any questions that come in. And with that, I'll hand it over to John. Good morning, John.
Good morning, Joel. Thanks, and welcome, everyone. I'm happy to be here with you today to go over BPA's second quarter results. As a reminder, last quarter, we transitioned to our new 2024 to 2028 strategic plan. So you may notice a few new updates to our slides, which I'll call out along the way. Now moving to slide 5. Now you can see the metrics that reflect our core operations. Now these are displayed a little differently than in the past, but the metrics themselves are unchanged. And a couple of red areas have our full attention, and Marcus will describe the financial picture in a moment, including what's driving our agency net revenues. But I want to add some context to what's happening with the water year. Now, I think we are all aware that the Federal Columbia River system enjoys a geographically diverse footprint, and that diversity is the cornerstone of the system's strength and resilience. Washington, Western Montana, and Canada all had low snowpacks this winter. However, portions of the Snake River Basin were much closer to or even above average. Now, the May water supply forecast for the Northwest River Forecast from the Northwest River Forecast Center pegged our water supply for January to July at 81.2 million acre feet, or 78% of the 30-year average. Now, while that number was low, it has improved somewhat in the past couple of weeks, and it is well within BPA's planning parameters. And snowpack is just one part of the equation. The shape and timing of how the snowpack enters the system as runoff is another significant factor. Now, if we continue to avoid significant heat waves in late spring and early summer, our operational year may end up looking fairly average. Now, if we do experience significant or prolonged heat waves, we have both treaty and non-treaty water agreements with Canada, as well as financial reserves that can help us navigate this water year by leveraging markets. Now, there is also advantages of the new spill regime in late summer, which allows for more generation in August and can be helpful in managing heat waves during low flow conditions. In short, we have every confidence of meeting our customer commitments. Now, turning to power reliability, you can see the forced outage factor is red. Now, this is primarily due to outages at Grand Coulee, specifically the 805 megawatt Unit 23. The long-term outages at John Day and the Dalles are also contributors. However, short-term outages at Grand Coulee, John Day, and Bonneville dams are slated to return to service later this year. Now, moving to transmission, three of our four SAIDI and SAIFI metrics are red, meaning we exceeded those targets for the frequency and duration of transmission outages. Now, this is a result of the severe storm we experienced in January. And it's typical to see these KPI measures dip into the yellow or red territory following harsh winter months, and then even out as we move throughout the year. Now, we expect these to return to green by the end of the year. Now, one other thing you might notice on the slide is that we're no longer including the status of our grid modernization key strategic initiative, which was our only KSI under the previous strategic plan. Now, the grid mod KSI is nearing completion, and we are phasing it out as planned later this year. And we're developing new KSIs that align with our new strategic plan, and I'll be discussing those strategic initiatives as they advance throughout the year. Now, I'll hand it over to Marcus for more details on our financial performance.
Okay, thank you, John. It's a pleasure to be here with everyone today for the second quarter review. We're forecasting green on all of our financial KPIs except for net revenue, which remains below target, and I'll go into the details on that in the following slides. But overall, kind of the bottom line at Q2 is that it's been a tough year so far on the trading floor due to record low hydro generation coupled with record high prices. During the January cold snap alone, we took nearly a $300 million loss. Significant power purchases to meet preference load obligations are the key driver of net revenue being off target. On the more positive side, even in a tough year, days cash on hand is still on target, meaning there is a low likelihood of a crack or a surcharge. That's because we've taken very prudent measures over the past several years to bolster our liquidity position, including implementing the financial reserves policy, which has allowed us to buffer a tough year like this without having to trigger a crack or surcharge and raise rates. Our ability to do this aligns directly with our financial plan strategy to provide low and stable rates over the long term, even during challenging market and hydrological conditions. And I'm happy to say we are continuing to execute on that plan. Agency capital expenditures are on track to meet the end of year target, and capital execution is continuing at a strong pace. For Fed Hydro, roughly 60% of the forecast capital expenditures are associated with major capital projects. This is easily the highest we have seen in the program and will likely lead to improved execution rates. Transmission's capital execution is also strong this year. The agency's short-term debt-to-asset ratio is on target to be at or below 81%. The longer-term target of 60% debt-to-asset ratio is also forecast to be on target for the agency as well as power services. The expectation for transmission has changed to a cautionary yellow due to expected increases in capital investments for the evolving grid and other regional expansion and interconnection initiatives. Moving to slide 8, BPA is forecasting to miss the agency net revenue KPI target of $95 million, and that's the blue bar on the far left. Here you can see the key drivers for this result. Red means the driver reduces the forecast relative to the KPI target, while green means the driver increases the forecast. Moving on to the next bar on the right, operating revenues are forecast to be $408 million higher than target, and this is largely because of higher than expected trading floor sales due to higher prices. Additionally, we're seeing increased 4H10C Treasury credits resulting from increased replacement power purchases at higher market prices. Transmission is also contributing to the better than expected revenues as a result of favorable market prices. We're forecasting IPR expenses to end the year $7 million less than target due to lower personnel costs and less staff on board than planned. Moving on to the next bar, we expect non-IPR expenses to be $789 million higher than target, largely driven by higher than expected power purchases. And combining all these together results in second quarter agency net revenue forecast of negative $280 million, which is $375 million below the target. And given this, it's unlikely we'll meet the end of year net revenue target. Turning to Power on slide 9, the blue bar on the left is Power's KPI target of $100 million. And going to the second bar, Power's operating revenues are $342 million above the KPI target. This is driven by higher trading floor sales due to higher market prices than were planned throughout the year. In addition, our forecast of 4H10C credits is much higher than target due to higher prices. These revenue increases are slightly offset by the slice true-up forecast credit of $10.4 million as a result of higher than expected 4H10C credits. Moving on to the third bar, IPR expenses are $14 million below the target. Asset management expenses are below target primarily due to hiring and contract delays in Fish and Wildlife. This is partially offset by higher forecasts for the Army Corps of Engineers, Bureau of Reclamation, and Columbia River fish mitigation studies due to higher than expected inflation. Operations expenses are below target primarily due to lower staffing, less travel and training, and lower conservation infrastructure spending. And finally, enterprise services programs are below target mainly due to some hiring delays resulting in lower staffing costs. In the fourth bar, non-IPR expenses are $741 million above the KPI target, primarily due to increased power purchase expenses. And we continue to see dry conditions, high prices, and low water for power generation, which is driving up our power purchase expense significantly above the target. Higher power purchase expenses more than offset increased secondary sales, and this is the main reason we expect net secondary to underperform this year. Driven by higher non-IPR expenses, Power's second quarter net revenue forecast is negative $285 million, which is $385 million below the KPI target. Moving to transmission on slide 10, starting with the blue bar on the left, transmission's KPI target is negative $4 million. Looking at the second bar, operating revenues are $42 million above the KPI target, driven mainly by higher EIM-related ancillary revenues. We also expect increased Southern Intertie short-term revenues driven by favorable market prices, which we expect to lead to increased wheeling revenues. Moving to the third bar, transmission's IPR expenses are forecast to be $7 million above target, and this is primarily driven by increased maintenance costs and higher costs related to fleet operations. The fourth bar, non-IPR expenses are forecast to be $30 million above the KPI target, largely due to EIM entity scheduling coordinator settlement charges. This is partially offset by lower depreciation expense, lower net interest expense, and other income. Looking at the bar on the far right, in total, transmission's higher expected operating revenues offset the increased cost pressures in IPR and non-IPR expense. This results in end-of-year transmission net revenues of $1 million, which is $5 million above the KPI target. Let's turn now to financial reserves on slide 11. Agency financial reserves for risk are forecast to be $720 million at the end of the fiscal year. This is a decrease of $567 million from the prior year. From a business line perspective, we are forecasting Power to end the year with $454 million in reserves for risk. This is a decrease of $469 million from the prior year. And of this, $285 million was a planned reduction as part of the RDC. Transmission is forecast to end the year with $266 million in reserves for risk. It's a decrease of $97 million, and of the $97 million, $80 million was planned as part of the RDC. Looking at days cash on hand, which is a key performance indicator associated with the financial plan, the agency is forecast to end the year at 97 days, Power at 87 days, and transmission at 122 days cash on hand. Finally, we've modeled the reserves forecast uncertainty for the remainder of the year, and because of our strong starting liquidity position and liquidity preservation tools, there is less than a 1% modeled probability for a crack for either business unit. For power, there's a 2% modeled probability of an RDC with an expected value of $1 million. For transmission, there's a 56% modeled probability of an RDC with an expected value of $34 million. As a reminder, we still have half of the year to go. The water picture is much clearer today than it was at the first quarter, but there's still quite a bit of uncertainty remaining with 6 months to go before year end, especially with the potential for scarcity pricing that we've seen recently. So these estimates should be viewed with caution. Turning to our capital program on slide 12, you can see that most asset categories are meeting or exceeding their midpoint execution targets. The blue bar on the far left is the KPI midpoint target of $818 million for capital expenditures. The upper and lower dashed gray lines are the target execution range for our total direct capital investments. Moving to the transmission bar, there's a $102 million increase relative to the midpoint target. Earlier this fiscal year, transmission started with a risk-adjusted forecast of $438 million due to multiple risks coming out of the pandemic, which include global supply chain constraints and high demand for resources. Transmission has navigated these constraints, resulting in solid project execution, especially the Longhorn project, which will bring a connection of the Boardman to Hemingway transmission line to BPA customers, as well as meet other customer requests. Moving to Fed Hydro, the forecast increased by $6 million to accommodate work ramping up on larger projects such as the Chief Joe Dam generator windings and multiple projects at Grand Coulee Dam. For enterprise services, which includes facilities, fleet, IT, and security asset categories, the forecast is $6 million above the midpoint target. Almost all of this increase is in facilities to support procurement of materials and equipment for the Vancouver Control Center project. Turning to environment, fish, and wildlife, the forecast is below the midpoint target by $5 million due to lower forecast spending for hatchery projects. This is partially offset by a land acquisition planned for fiscal year 23 that was extended to fiscal year 24. The blue bar on the far right is the total agency capital forecast of $928 million, which is within the target range for capital execution. And lastly, from me on the financial updates, we received updated ratings from Moody's, Fitch, and Standard & Poor's in April, and I'm very pleased to report that our ratings were affirmed with no changes. We are rated AA1 with Moody's, AA with Fitch, and AA- with Standard & Poor's. This means we continue to maintain high investment grade credit ratings in alignment with our financial plan goals. Following these ratings, BPA and Energy Northwest were in the market for 2 bond deals, issuing a total of $840 million of tax-exempt debt over 2 separate pricings. In addition to our strong credit ratings, we have ramped up our investor relations activity. This helped us achieve very competitive rates in both pricings despite market headwinds. For both pricings, we were over 3 times subscribed, meaning there was more demand to buy the bonds than we had available for sale. We had over 50 investors placing orders in the first pricing, which is a significant increase over last year's bond deal. This allowed us to tighten spreads, essentially lowering the interest rate by as much as 6 basis points on some maturities. This saved a significant amount of money on future interest costs. All in all, it was a very successful outcome. So this concludes the financial report for the second quarter. Thank you all for your time, and I'll now turn it back over to John.
All right, thank you, Marcus, for walking us through those results. And let's turn our attention to an update on some of our strategic initiatives. Now, I have to start by acknowledging that there is a lot going on across BPA. All of the processes underway require a lot of time, attention, and effort on everyone's part. And we are committed to staying coordinated across these initiatives and doing what we can to stagger the workload to minimize the demands on our customers and interested parties. Now, these are the 6 strategic goals of our 2024 to 2028 strategic plan. Today, I'd like to focus on a few of the most timely updates. Now, as far as invest in people is concerned, we are doing a lot of work behind the scenes to ensure we have the right work environment, culture, and workforce capabilities to deliver on our mission and achieve all of our commitments. Now, this work might not always be visible to you, but the outcomes will. We have amplified our recruitment and outreach activities, including targeted outreach to help fill mission-critical positions that are notoriously hard to fill across our industry. Now, we are also prioritizing recruitment among women and minorities to help us advance our diversity goals, which goes hand in hand with inclusivity to enhance creativity, innovation, and results in the workplace. I'm happy to report that we're trending in the right direction. Now, looking ahead at some key initiatives to sustain financial strength, we are preparing to launch our public process to develop forecast spending levels for the next rate period, called the Integrated Program Review. Now, BPA has been preparing internal forecasts that reflect the expected costs for the next 3 fiscal years, 2026 through 2028. And while our primary financial goal continues to be providing low, stable, competitive rates, investments are needed to ensure the federal power system can meet our customer growing needs, support load growth and the integration of more renewables, and continue to provide reliable power as the resource mix changes and we consider participating in new energy markets. Now, while BPA has been working hard to manage costs, these commitments are driving significant IPR cost pressures. In connection with IPR, we are updating our strategic asset management plans for each asset category. These 10-year plans are aligned with IPR to better inform our capital spending forecast. Now, you'll be able to find these in the coming days at bpa.gov under the Asset Management section of our finance page. Now, we encourage interested parties to participate in the upcoming IPR workshops to learn more about BPA's programs and our cost forecasts. The first IPR workshop is scheduled for June 27th. Now, I'd like to spend a little time on some of our efforts to enhance the value of products and services. One of our initiatives is provider choice, the regional effort to develop products, services, policies, and rate structures for the future long-term power sales agreements. BPA published a provider of choice final policy and record of decision in March, and we are now in the policy implementation and contract development phase. Public workshops and public meetings in the FY2024 will draw customer insights and feedback to refine remaining policy concepts and support contract language development. These activities will lead to the release and completion of contract drafts next fiscal year. Now, in our day-ahead market decision process, BPA issued a staff recommendation in April related to BPA's potential participation. The staff recommendation marked a key step in our decision process, providing transparency into our assessment and offering the opportunity for customers and constituents to respond. Now, we accepted comments through May 3rd, and that feedback will help us formulate a final decision later this year. In making this recommendation, staff considered a range of market features and risks, including governance, how the markets can help our customers achieve state-driven greenhouse gas requirements, and alignment with the Western Resource Adequacy Program. Now, the paper outlines staff's preference for the stakeholder-driven governance framework of the Southwest Power Pool's Markets Plus option over the state-driven governance of the California ISO extended day-ahead market, which would likely put our customers at a disadvantage. But this does not mean we are excluding EDAM from consideration. To the contrary, we are monitoring efforts to develop a structure for independent oversight of the Cal ISO's market services and will consider any developments in making a final decision. Now, BPA will continue to engage with our customers and others in the region through a series of workshops through July. We expect to release a draft policy and record of decision in August, followed by a final policy and ROD in late November. Another core objective of our strategic plan is to advance transmission investments and innovative solutions to integrate loads and resources. In connection with this objective, we have updated the transmission business model to align with the agency's strategic plan. The TBM envisions multiple changes that are required to achieve BPA's strategic goals. This is the 5th update to the transmission business model since 2017, and it continues to articulate how transmission creates, delivers, and captures value for our customers in the region. So look forward to the new TBM to be published on bpa.gov in the coming days. Now, last week, we held an Evolving Grid workshop to provide updates on the range of transmission initiatives that fall under this category of work, one of which is grid expansion. At last quarter's QBR, I shared that we had completed the 2023 cluster study, which included 16,000 megawatts from 222 transmission service requests. To serve these requests, BPA identified 14 new projects that would be needed at an estimated cost of $3.9 billion. However, the preliminary engineering costs of these projects were severely underfunded by customers who need them for firm service. The BPA is working to determine how best to keep the projects moving forward. Now, I encourage you to review the Evolving Grid workshop materials for details on the cluster study, project updates, and more. And we expect to hold the next Evolving Grid workshop in the fall. And while we're on the topic of transmission, I want to share that BPA has released an update to our wildfire mitigation plan. The improvements to this year's plan strengthen our efforts to prevent fires, limit wildfire impact on the grid, and will help us better coordinate with customers during challenging events. And we've incorporated lessons learned to improve the public safety power shutoff procedure, and we've advanced modeling and data integration to better prioritize vegetation management and maintenance on lines posing the greatest wildfire threat. Now, moving on to fish and wildlife, over the last quarter, BPA continued to make progress with our tribal partners. We signed 2 new long-term agreements, one with the Coeur d'Alene tribe, signed in February, and one with the Spokane Tribe of Indians, signed in early May. Both agreements will benefit fish and wildlife impacted by federal dam construction in the Upper Columbia River Basin. These agreements are closely related to the Memorandum of Agreement signed in September of 2023 by the U.S. government and the Spokane and Coeur d'Alene tribes, as well as the Confederated Tribes of the Colville Reservation. Now, the substance of that agreement, known as the Phase 2 Implementation Plan, or P2IP, calls for the U.S. government to provide resources and support the tribes as they test the feasibility of reintroducing non-ESA listed salmon into the blocked areas of the Upper Columbia River. Now, I'm proud how we are strengthening our relationships with tribes and look forward to advancing our shared goals through these partnerships. Also in Q2, BPA released a report on our fish and wildlife accomplishments. It describes the many ways BPA and our partners have protected and enhanced the Northwest natural environment over the decades. Now, among our achievements, we've protected over 1 million acres of wildlife habitat, about 10 times the size of Seattle, with more being protected each year. And I encourage you to read the report called BPA Invests in the Environment, Fish and Wildlife for more details on these efforts. Now, that concludes my updates, and I'm happy to turn it back over to Joel. Thank you.
All right. Thank you, John and Marcus. Now I'm going to highlight some of our upcoming meetings, workshops, and processes, and we'll close out with any questions that come in. As a reminder, you can find our customer and public meetings listed on the event calendar at bpa.gov. Here are a few highlights. This afternoon at the QBR Technical Workshop, our finance team will provide additional information on some of the topics discussed this morning. We encourage you to participate in this workshop, which begins at 1 p.m. And you can find more info about the technical workshop on our QBR webpage at bpa.gov/QBR. BPA's corporate functions will be closed on Monday, May 27th, in observance of the Memorial Day federal holiday. And I encourage all of you to take a moment on Monday to remember and honor our service members who died while serving our nation and to reflect on the freedom and values that we enjoy today because of their sacrifices. We're hosting a number of provider of choice workshops this summer. Notably, we're hosting a provider of choice drafting workshop in the afternoon of June 10th. And as a reminder, BPA released its provider of choice policy and record of decision back on March 21st. In April, we began a public process to determine how to implement the policy through provider of choice contracts and other associated rate methodology processes. On June 3rd, we'll be facilitating the 7th Day Ahead Market Participation Workshop. BPA's evaluation of its potential participation in the Day Ahead market will engage in a public review process through the fall. I'd also like to note that the public comment period, where BPA presented its Day Ahead market policy paper and staff recommendations, closed earlier this month, back on May 3rd. The rate period high water mark is the amount of energy a customer is eligible to purchase at Tier 1 rates during a given rate period. BPA will share preliminary Tier 1 system size calculations at a public workshop on June 4th. Individual customer values will then be published following the workshop. We're hosting a series of BP26 TC26 rate case and tariff pre-procedural workshops, which we kicked off a few months ago. After each monthly workshop, customers have an opportunity to lead a customer-led rate case workshop in response to the previous Bonneville-led workshop. The next BP26 TC26 customer-led workshop is scheduled for June 13th. And please note that it will be canceled if we don't receive any requests to hold it. The next generator interconnection queue reform process update is on June 4th. And these meetings provide information about BPA's efforts to improve its generator interconnection queue policies and procedures. Okay, next slide. Yeah, we don't have any active comment periods right now. And while we aren't currently seeking comments on public processes, programs, and projects, you can find our public comment period listed on our Public Involvement and Decisions webpage. There's a link on the slide there. And on the public comment section on our website, you can submit comments for any comment period and also view past comments that have been submitted. Okay, I think we're ready to head into Q&A. That concludes the main part of our presentation. I saw we had a question come in earlier from Corinne that we responded to. Have we had any others trickle in?
Thank you, Joel. So far, we have not received any additional questions via the chat. To reiterate Corinne's question, she was asking about the probability of the RDC's triggering per business line. Please see the chat for the specific probability. I'm going to check to see if we have any participants who are raising their hand, wanting to ask a question audibly. So far, I don't see any.
All right, we can give folks a moment here in case someone is eagerly typing a question.
There was a lot of good information presented today. Thank you to the presenters.
Okay, last call for questions. You could always save them for the technical workshop this afternoon, if you prefer. Okay. Well, I guess we will conclude this morning's presentation. If you do think of a question later or even after the technical workshop, you can email us at communications@bpa.gov. We'll be posting responses as well as a transcript and the recording of today's meeting on the QBR webpage in the coming weeks. Furthermore, if you have a topic that you think warrants further discussion, please email us at communications@bpa.gov, and we will look at the best way for providing you that information. And to wrap things up, we really appreciate you joining us today. Our next quarterly business review will be in August. On Wednesday, August 14th, we will present the agency's Q3 performance results for fiscal year 2024. Until then, have a safe and healthy start to your summer, and we look forward to bringing you the next QBR in August. Thank you.